The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin, Jeong. Electrification has become one of the defining megatrends of our time. What started as a niche push for electric cars has now expanded into a sweeping transformation across multiple industries. From EVs and charging networks to power grids, renewable energy storage, and even industrial transport, the race to electrify is reshaping how economies operate. For investors, the electrification story is both exciting and complex. On one hand, it offers exposure to long-term structural growth themes, and on the other, it comes with significant challenges. With so many moving parts, understanding electrification as an investment theme requires looking at the bigger picture as well as the details on the ground. So what's driving the momentum? Which sectors are best positioned to benefit? What risks could derail the transition? And most importantly, how should investors think about positioning their portfolios to capture opportunities while managing volatility? Well, to find out more, joining me now is Gautam Chadda, Head of Strategic Advisory Asia at RBC Wealth Management. Gautam, welcome back to the show.
Good afternoon. Thank you so much for having me.
Thank you so much for joining us. Well, Gautam, how would you define electrification as an investment theme in today's markets, and why has electrification become such a strong global megatrend?
Electrification is the investment theme capturing the global energy transition towards electricity as the dominant energy carrier, and I'll come back to that in a moment. And it's driven by decarbonization, enabled by technology, and monetized through opportunities across a range of sectors from power, storage, infrastructure. But by the term energy carrier, I just want to touch on that for a moment because it's used in energy systems in how primary energy is delivered and used. So today, oil is the dominant energy carrier in transport, gas in heating, and coal in power. And the theme is that for electrification, electricity will be increasingly displacing these carriers because it can be generated from multiple sources and delivered more efficiently. And so we've got a long way to go, but we believe that this megatrend has started.
Right.
Now, the points regarding electrification why it's becoming a megatrend, three main reasons. The first is policies and regulations such as net zero subsidies and also corporate responsibility pushing for lower carbon fuels. The second is technological breakthroughs in a range of sectors, but also especially in battery technology, where the prices have also fallen quite a lot. And lastly, capital flows, huge public and huge private investments into clean power generation, energy storage, and transmission grids. And so we think all of these will be combining to get the energy transition trend moving.
Okay. I mean, we're also seeing this broad shift toward electric power technologies, especially in transportation, energy, and industrial sectors. So how are electrification-related developments affecting broader markets as well as traditional sectors like oil and gas or even automakers?
So a couple of different areas here. So the big picture, stepping up and looking at the bird's eye view, electrification is going to lead to some commodity price inflation, metals and electricity, and therefore there'll be some upward pressure on rates as a result of that higher expected impulse on inflationary pressures. But within equities, and we think about sectors, there's been a sector rotation into sectors such as utilities and industrials, and that's really been one of the key ways of playing this theme. And autos remain fragmented as a sector. So for energy sector as well, increasing electric vehicle penetration is going to reduce gasoline demand over the long term. And we think that on some level that may well cap valuations in spite of the fact that interesting cash flows from the sector. And the other thing about the autos is very interesting is that traditional automakers may suffer some form of profitability freeze as they invest in capex to pivot towards building EVs and retooling workshops and the like. And so even early movers in the EV space who have scale will be a little bit ahead. But perhaps the most interesting opportunities within the auto section will be actually in the EV supply chain. So companies around batteries, semiconductors, and charging infrastructure.
Okay, so what role are commodities like lithium, copper, or even nickel playing in driving or perhaps constraining the electrification trend?
Yeah, along with some of other critical minerals as well, these three in particular play a significant role in electrical networks, in electric vehicles, and in battery storage. So these commodities are important with regard to electrification, as they're using the raw materials to develop various components, infrastructure, and products related to these areas. The supply of them is very concentrated in just a handful of countries, and it does vary by commodity, and much more so than oil and gas, for example. But for the listeners, what's really interesting is yet more concentrated is the processing of these commodities and minerals. And the dominant player for processing for all of these three is China. And therefore, these minerals are vulnerable to some resource nationalism and potential impact on tariffs and trade. And that you're seeing that play out in the geopolitical and trade negotiations that we see today.
Definitely. So are investors currently treating electrification as a long-term secular play, or is there a risk of it becoming another, cyclical boom-bust theme?
Investors have certainly seen and have certainly got the early stage awareness of the theme, and the trend is likely to play out, as I said, over the long term in our view at RBC Wealth Management. So the long-term global demand and policy priorities, as well as funding for investment coming through, as long as we see those, then we're likely to see this theme play out over the coming years. As you know, markets by their very nature often swing from deeply negative sentiment to huge elated positive sentiment. And these near-term booms and busts should be put into the context of what they are. Looking at the overall investment view, we want to take a long-term view on this thesis and evaluate the risks of every individual investment in the context of a portfolio and invest accordingly. So, there may be boom and bust in the short term, but nothing to be fearful of for the long-term investor.
Right. So, Gautam, where do you see the biggest investment opportunities in the electrification space right now?
It's a really broad theme. It's got numerous opportunities because by its very nature, it intersects across a number of sectors such as infrastructure, materials, utilities, technology, defense. So some examples would be utilities today, which are shifting towards both growth and yield from policy-driven opportunities. Historically, they've been seen as much more of a yield-only opportunity. Very interesting today. Grid modernization and transmission infrastructure, electric vehicle infrastructure and charging ecosystems, industrial electrification, particularly heavy machinery and components. So a real range of things. And not to forget our digital infrastructure and materials and supply chains, which really are going to be part of building these out. So really a broad range.
Right. I mean, when it comes to building a portfolio, we have to think about diversifying, right, Gautam? I mean, so how should investors think about diversification when it comes to investing in the theme of electrification? Should they invest across geographies or along the value chain?
Talked about this many times before, so I think your listeners will be familiar. But at RBC Wealth Management, we endeavour to build diversified portfolios, both across asset classes and within an asset class. And actually, it might be worth just peeling back the onion here a little bit. We're talking about diversification of something like electrification, which is represented in multiple sectors of the economy. It's important to look at the portfolio across asset classes and look at the exposures and which ones might be correlated to the same themes. And what I mean by that is, if we have a portfolio, for example, that only held EVs, utilities, battery makers, if the electrification theme came under some pressure and sentiment-driven sell-off, the whole portfolio would be down. And so when we look at building portfolios, what we've got to do is really look at the cross-portfolio risks, not just traditional diversification by sector, but actually are the positions within the sectors exposed to some risks that are correlated. And so we want to be diversified from those as well. And ultimately, once we've looked at those portfolios, what we're doing is tilting the risk exposures of the portfolio to favor the risk-adjusted returns that we feel clients would benefit from. And today, electrification is certainly one of them.
You mentioned diversifying across asset classes here. So for investors, how can they get exposure to the electrification trend? Is it through individual stocks? Is it ETFs or even thematic funds?
Well, what's great today in the investment landscape is investors have access to a wide array of instruments to choose from when thinking about making any investment decision, not just electrification. And here's the thing investors really need to watch out for. There is an investment thesis, and today we're discussing electrification as a theme. And then there's a choice of product or instrument to invest in and place in their portfolio. And they're two very different things. And so making sure the product an investor uses matches closely the risk reward and the exposures, economic exposures of the investment thesis they're trying to track is really an important task for the investor. It's really important to learn the products and instruments, therefore, how they operate, their risk characteristics, and really understand them. And also, I would say this is the point where investors can take on professional advice and get that guidance.
Right. Well, I mean, we talked about the opportunities here, but what are the key risks, both macroeconomic and sector specific, that investors should be aware of?
I think a number of key risks. The ones that jump out really are policy, risk of policy changes. And we've had that to some extent in the US, but we feel electrification continues to make ground. The cost of debt, because some of the infrastructure bills will be on borrowed money, and so the cost of debt will really impact the economics of that. And any weakening in electricity demand over the coming years will clearly impact electrification, but it's worth spelling that out. So, for example, proposed innovations in AI and the development of AI toolkits and the background for them, such as building data centers and AI infrastructure, that's going to be one of the largest sources of demand going forward. And so we need that to come through. If that doesn't come through and there's a question mark on the efficacy of AI models and build-outs, that could be one area as well. But on the whole, on balance of probabilities and risks, we at RBC Wealth Management really believe the electrification theme is unstoppable over the next, the coming years ahead.
Right. Well, looking ahead, do you see electrification merging with other megatrends like AI, automation, or decarbonization to create new investment opportunities?
Absolutely. And I think it's funny because we think they're sort of all interlinked with each other. I think decarbonization is a big part of clean energy, which is really helping with electrification and getting diversified source of electricity at a cheaper level, more available. So that will certainly help. Other mega trends like AI are very interesting because they're interacting with electrification on both sides. So on one side, it's the massive use of energy for data centers, especially when they're training large language models and the like. But on the other side, using those AI toolkits to make efficiencies in regulating energy flow, in regulating grids and energy transmission is also an actual tool. So actually there's like a real interconnectedness, very big, for anybody who's British, Spaghetti Junction, the motorway section in Birmingham where they all mix and then go. It's a little bit like that.
Okay, great analogy there. But before we let you go here, Gautam, what milestones or signals should investors watch in for the next few months that could accelerate or even slow electrification?
Clearly, state-level policies with respect to incentives for renewables, such as net zero goals, EV adoption targets, and grid infrastructure spending will be key, just to show that this theme remains on track and is unfolding as expected. In line with this, monitoring fiscal policies from countries is a really big part of it. I would say, I think 200 countries have policies on net zero at the moment declared. And so there is a groundswell of support for these kinds of things, but it's worth watching whether the governments put fiscal policy, put money behind it, and that will be one thing to watch. Monitoring energy demand dynamics, and we talked about the growth in data centers being a big part of that, but there are other sources of energy demand to monitor as well, so such as more use of air conditioning units, for example, in developing countries as economic growth picks up. So well worth looking at those. And lastly, just keeping abreast of innovations. And one thing is for sure, the innovations happening within the industrial space, battery storage and usage, transmission of electricity and power are remarkable. And staying on top of those will be a very good way of understanding what's happening in the ecosystem for electrification.
All right. Always some great insights from you. Thank you so much, Gautam, for joining me today.
My pleasure. Thanks so much for having me.
Thank you. That was Gautam Chadda, Head of Strategic Advisory Asia at RBC Wealth Management. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.